Now what happens is once a quarter, now you have cannabis tax reporting. Now what's interesting is you think you're done because you have the two pieces. You have a cultivation side and you have a retail side. Oh, but there's more. What happens is that when you do the reporting, they also want to know how much is for medical use and how much is for adult use. So now you think to yourself, how in the world do I get that information? Because the cultivator has no clue when he sells that product, okay?
Welcome to the Cloud Accounting Podcast. I'm Blake Oliver.
I'm David Leary.
I am Tom Andersen.
I'm Bruce Andersen.
And we are live at the Accounting Finance Show Los Angeles at the L.A. Convention Center.
And when in L.A. or when in California, what better topic other than cannabis to speak about?
Yeah, so thanks, Bruce. Thanks, Thomas, for joining us. This is my very first cannabis experience in terms of podcasting. I know nothing, almost nothing about it from the CPA perspective, from the accounting world. So I'm eager to hear from you, everything I need to know in the next 30 minutes.
The only thing I know is...
No pressure.
Is on the iTunes top podcast charts for business news, is us and Marijuana Daily keep exchanging who's the best 40, 41, 42. They're right there, neck and neck. So hopefully with this episode, we'll pass Marijuana Daily in the iTunes charts.
Yeah, maybe we could do a crossover episode at some point. This will get their attention. So, Bruce, why does it here on your business card it say Bruce at cannabiscpa.tax? What was the deal with going all in on cannabis?
So the situation that presented itself was that Tom had been involved in the cannabis space since 2005, 2006, 2007. The laws changed in 2017, and so in 2018 he came to me and said, "Are you in?" And so we then started thinking about the positioning of the business. And if you notice, our business cards actually have two sides of them. So we have one which is a traditional card, and then we have specialized with a practice area specifically for cannabis. And that way it identifies that we're basically in it from a standpoint of specializing and providing services in that area.
Niche. My favorite thing.
Yeah, and then David, of course, has been telling people for years that if you want to be successful as an accountant these days, you really need to find I like to say niche, but we can agree to disagree on that.
Boutique, maybe.
Yeah, boutique. So, what are the biggest challenges that cannabis businesses face, and how are you helping them solve those challenges?
So I think the interesting part about it is that this is a new industry for legalized cannabis, and so therefore there's a lot of really good operators that have been in the business for years and years and years, and yet them to be now faced with taxation is a huge, big thing. You also have those that have come in from just the investment standpoint or other industries, and they're coming in and saying, "Wow, this is a really cool thing. I'm going to make my gazillion dollars at it." And it's a situation where if they're not schooled well and managed properly, they're going to really fall on their face. And the biggest thing is, and I'll leave this to Tom, is really the local municipal tax is such a huge thing, and the licensing. If you don't have local licensing, you're not in business.
Well, also I would like to add that in 2005, 6, 7, 90% of the people I was dealing with were street gangsters, mafioso types, organized crime syndicate types. And if you fast forward to current time, there's maybe 5% of those types of folks in the business. The other 95% are advanced degree holders, chemists, PhD holders, MBA holders, folks that have been given higher education, so they really know what they're doing. They're not just winging it. And they're the ones that have the business acumen to acquire those licenses, where some of these street guys just don't know how to do it.
So how do you, this is a podcast about cloud accounting. How do you do cloud? How do you do technology in an environment where I understand banking is very difficult to come by, and it's it's still very cash based, right? Or is that different?
Well, so that's two questions, if I understand it. One is the how do we do the accounting? And the second half is what do we do with money now that we've accounted it?
Yeah.
So the first part is simply I prefer hosted. I don't prefer having servers on site. fire, flood, theft, raid, whatever. But, for example, QuickBooks Online or a hosted QuickBooks Enterprise are my two preferred go-tos, provided the client goes along. And then as far as what happens with the cash, now there are third-party, what was the specific term again?
Non-bank financial institutions.
Thank you. Non-bank financial institutions. It's like PayPal-esque type operations with little quirks for each one. And effectively, that way you can convert your money into that currency, if you want to use the term currency, purchase from the vendor, and then at that point, that vendor now has it in their account. They transfer it to their standard bank account.
So, sorry, are we talking about cryptocurrency in this situation, or are these just like Venmos or
mostly Venmos? But you mentioned crypto. I smile because I think of Dennis Rodman flying to North Korea on all his money he made from crypto, from Potcoin.
Yeah, I must have missed that one.
Yeah, he went and met with...
I didn't know that was crypto.
Yeah, he funded that expedition on crypto. Yeah.
Wow, that's amazing.
I think if you go back to your issue about cloud accounting, it's a very important feature that you understand the layers associated with the cannabis space. So with the permanent licensing that now is in place in some of the clients within California and some of the license holders, now there's metric to report to, which basically is about 18 touches to it. It starts with cultivation and goes completely through to retail, and includes waste. So therefore, it's 18 touches to report. So anytime the product moves in the cannabis space, it has to report. The problem is that if you're not a permanent license holder, then you don't have to report yet, but that'll change as we go down the line. The second layer down then is what we call seed to sale, or cannabis software layer. And the important feature there is that really is the operational piece of software that's involved. And so it just depends on if you're micro or if you have a particular vertical. If you're a dispensary, maybe you're a point of sale only. If you're a cultivation through distribution, then you're going to have those components that are part of your current seed to sale software. The important thing is that operators of literally any size need to have that seed to sale software, because there's going to be ongoing auditing that will occur. And if you don't have a nice seed to sale, then what's going to happen is you're going to be defending yourself against records you don't have. Because the state's going to come in and have reports, and you won't have the associated amounts.
So I want to make sure I understand this. So when you say seed to sale, you're saying every time the product is it's like inventory, tracking inventory through a manufacturing process? Kind of that sort of thing? Okay. Because I remember that from my cost accounting class, right? Is every time we move inventory or we add to it, we have to track that. So we're doing that with the cannabis products.
Absolutely.
4 points. It's if you create a product, modify a product, move a product physically from one bin or location to another, and then destroy.
Got it. So there's specialized software that has been developed for this industry?
Yes, there are approximately 60, almost 70 programs called seed to sale or track and trace programs. I went through Q3 last year and literally called every single one of them up, surveyed them with a 119-question survey and a few open-ended questions just to see how they fielded them. Immediately off the bat, I knocked anybody off who did not have, let me rephrase that. I removed from my list anybody who did not have an API connection.
I was thinking that myself. I was like, as you described this, if a grower's using app A and the seller's using app B, but you have to track that data moving across. Did they have to have APIs? I was thinking
APIs are the best way to go. And the reason I say that is that Metric is notoriously slow. I'm attributing it to bandwidth.
Could you define Metric?
Metric is a program produced by Franwell Incorporated. Franwell made their bones by tracking and tracing blueberries and E. coli and other agricultural bacteria and so on and so forth. Franwell then also produced Metric, which it's an acronym for Marijuana Enforcement Tracking Reporting Compliance. Now, that is the government side of the software. So you've got your 3 layers of software. You've got your let's say your QuickBooks or QuickBooks or financial accounting layer. Mm-hmm. Then you've got your seed to sale, which some folks will refer to as like a manufacturing program or whatever. And then that in turn reports to the state.
Oh, and the API will allow it to report automatic, integrate.
That's right. Now, I've personally experienced a 10-hour latency putting in a single sheet of 50 transactions into Metric before. Mm-hmm. So the reason I mention that is that's like the horror stories that you'll hear from other operators. Now, in this instance, this was about a year and a half ago when some of these programs were still, I would say, in puberty, not quite fully grown up. At this juncture, however, I would not try doing any manual metric entries at all. I would just use API and let it go.
So you mentioned there's like 60 or 70 of these programs out there, but you've narrowed down the list because you eliminated anyone without an API.
I didn't want to put my name behind a recommendation and have a potential multi-million-dollar client fall on their face.
So who's is it one app that has risen to the top for you guys that you recommend that you use?
Is there a QuickBooks of the cannabis world?
Yes. Or is it a handful, or what's it look like?
It depends on the vertical. If you're looking at a full micro business, meaning cultivation all the way through sales, then there are, I would say, 3 or 4 that I would point out. One would be BioTrack THC. One would be Proteus 420. Another one would be Leaf Logics. And then if you're talking...
And those would be for growers that they grow and they sell their own product.
This actually would go through all 3 stages of agricultural accounting, manufacturing accounting, and then sales accounting. And it would track and trace the seed to the yield, to the conversions, if it's made into an extract, that tracking as well. Mm-hmm. Everything has everything has a UID or a unique identifier, which is like a 26 or 28 digit identifier. So therefore, everything gets traced all the way to the point of sale to the consumer.
And those apps will do it all.
Those apps will do it all. Yes.
So then, so what you were going to continue with a different? There's more than one type, right?
More for
the one vertical.
My focus has always been until the last 2 years has been in distribution and in retail. So I've always looked at those programs. However, now the shift seems to be going towards the whole micro business model where they have 3 or 4 licenses from cultivation through distribution.
Oh, and those are separate licenses.
They're all separate licenses. Yes, sir.
Wow.
Yes.
And do you help your clients apply for those licenses and get those licenses? Is that part of what you do?
Well, in the past, yes, but in more common times, I've been advised that it's probably best to have an attorney do that.
Yeah.
Simply so it's not like you're practicing without a license.
Right. Yeah. Got it.
So, Bruce, if you could speak to this, obviously, because your .tax, right, is your domain name now. The reason all these states are legalizing cannabis is the taxes. They want to collect taxes.
Yes.
Like, is that simple? Is it like, how is this taxed? Like, how are they going to collect the taxes? Like, how does this all break down?
So it's an interesting area because first of all you start with municipal taxes and you have to have a municipal license before you can move upstream to get your state license. So at the local level, you're going to have different prices or costs associated with each of the licenses based upon the prevailing local area that you're in. So, for example, in Long Beach, if you're a cultivator, it's done by square foot. If you're in Los Angeles, then it's based upon a percentage of the overall sales associated with that particular area. And the other interesting thing about local taxes is that if you have a micro, then you're taxed at the last touch point of that business entity. So, for example, if you only are cultivating and you invoice there, then you're going to have a cultivation tax. If you have cultivation to distribution, then the cultivation has nothing and distribution gets taxed. And if you go right through to retail, then you escape all taxes until you get to retail, and then you get popped with taxes at the retail level.
And is it like more if I do the whole thing soup to nuts or what seed to
Seed to sale.
Seed to sale.
Good one.
If I do the whole thing seed to sale, then is there a tax benefit to doing that? It's a
tax benefit to the local agency, because the local agency is going to be taxed either 5 or 10% at the retail level, or it's 1 or 2% at the earlier levels.
So I live in the San Fernando Valley, and I understand that we have a lot of empty warehouse space in the valley, and that's part of the reason why we have lower taxes on cultivation. Is that correct? Have I heard right? Like, I'm just curious.
I guess that might be by default, not by design. However, that being said, the issue is not necessarily that the empty warehouse space is as a result of this industry. It could be simply zoning. Zoning is a huge issue. So there are certain areas and I should have brought a map for you. There's a map LA City DCR, Department of Cannabis Regulations, has put out, which show areas that have bubbles, which are basically like, here's a school, here's a church, can't have a dispensary nearby. Versus, for example, industrial parks, where you might have a cluster. Now, then there's the other rule, which is they have to be 650 feet apart, I believe. It fluctuated.
Each one has to be 650
That's right.
feet
so
apart
there's
from the
no
other.
oversaturation.
Okay.
And then there are two other parts I want to mention. One is that the LA City DCR only wants to issue another 150 retail licenses, and those are all going to have preference towards social equity. So that's going to take a little while, because City Council's dragged it out to November. So right now it's almost a freeze on retail. And then in closing on that, you have a drive, a shift of folks who want to stay in the industry, but they can't make any money on retail. Too many competitors and too many, as I call, black ops or fly-by-night ops, which are basically unlicensed shops that look licensed, but they're not. And those are the guys that are undercutting because they're not paying any taxes, and it creates quite a conundrum and quite a lot of confusion. Yeah.
Do you have an idea as to like how much of the business is legitimate versus black market?
The statistics I continue to hear, it's 88 to 90% black market.
Really?
Wow.
And that's because of it sounds like
taxes.
There's a lot of complexity in the tax and
It's
expense.
taxes. I call it the Italy model. And see, in Italy, they have some of the highest tax rates in the world, but they also have the highest black market activity in the world.
Right.
Now, if you look at that model and you find other countries with high tax rates, it's the same. So now here we have California, which is almost its own country at this point, and they're talking about 47 or 49% total after you've paid corporate tax, sales tax, excise tax, local tax, everything. So half your money's gone. So some operators who are not as savvy are getting washed out of the industry. Others are holding on, but. Hope that kind of gives you a little perspective.
No, being a Californian, it doesn't surprise me that we would legalize an industry, but then make the cost of compliance so high as to drive the legal operators out of business. That's essentially what seems to be happening here, right?
Yes, and there was a motion in the assembly, in the lower house, in the assembly, five assemblymen, 2 from L.A., had actually proposed that we drop the excise tax from 15 to 11%, and I thought that was great. A wonderful way to stimulate the legal economy, but that got shot down. So we'll see what's the next piece of legislation that comes through.
So a lot of the legislation is the local cities, right? I mean, municipalities. Right?
Local.
Then you get the counties, and then you get the states.
Counties are not involved in the process.
Counties are not. Okay.
Yeah, but at the state level, then you have an interesting series of splits where there's actually 3 different taxes paid at the state level. All are through CDTFA, which is the old Board of Equalization group, which now is a fancier title, which then is split into 2 pieces. One is a traditional sales tax you pay on anything. And then for the other part, then they call it cannabis tax, but then because of the misunderstanding about how that's defined, then they actually have two pieces of excise tax. One is on the cultivation side, and one is on the distribution side. So what happens is cultivation has three splits to it, and it's paid by the ounce of product. Just think about that, by the ounce of the products that are being put into the market. Okay. And then that's on the cultivation side, and that is when products are being sold from cultivator to distributor. Who is the remitter of that tax is the distributor. So what happens is when the cultivator is selling the product, he or she has to pass along the tax, because the cultivator can't remit the tax. Does not have a license for that. So that's on half of the state cannabis tax, as they call it. Now what happens is the product is repackaged, may go through manufacturing, other situations, and then it goes from the distributor to a retailer. That's another excise tax. Okay? So now that tax is at 24% of the wholesale price, or 15% of the retail price, which is a ratio that the state selects. Okay? Now what happens is once a quarter, now you have cannabis tax reporting. Now what's interesting is you think you're done because you have the two pieces. You have a cultivation side and you have a retail side. Oh, but there's more. What happens is that when you do the reporting, they also want to know how much is for medical use and how much is for adult use. Okay? So now you think to yourself, how in the world do I get that information? Because the cultivator has no clue when he sells that product. Okay?
That doesn't make no sense.
It makes no sense. Okay? Absolutely no sense at all.
Yeah.
And then when you go to even the last step, which is the distributor to the retailer, it's the same product. There's no packaging differential at all with that. So basically what happens is you have this goofy component to the tax reporting, which basically makes no sense, and there's no guidance for that.
So how do you advise your clients on reporting that information?
So you have to just be consistent in the way you do that. And if you're a micro, then what I use sometimes as a guide is, well, what was the ratio in which the retailer sold the product between medical and adult use? And then I just push it back through the system. Yeah.
Got it.
But there's no clarity on that at all.
Well, also, one other thing to note is that when you walk into a retail establishment now, brick and mortar retail, not delivery, they will generally just assume that you're rec, and you have to bring out your paperwork and show that you are medicinal and you're registered with the state agency and so on and so forth.
Oh, so the same retail establishment will sell both adult use and medical use.
That's correct.
Okay,
They pair the licenses. See, this all comes back to that whole slippery slope argument, but it's pairing licenses and eventually merging.
And so you get a different price if it's medical versus adult?
5% less tax.
Okay, got it.
So
that's like my Costco card or something.
Yeah.
They don't sell yet.
Yeah.
Oh,
not yet.
We're waiting for the Walmart of weed, that's all.
So how does the average accountant or bookkeeper that has a client come in that's in the cannabis industry, and they're going to engage that client? Is it something they should do? Should they punt them? Should they go find you? What's somebody supposed to do? Because this sounds so overly complicated, and it's changing. It probably is not even the same environment it was 18 months ago.
I have news feeds which basically show articles, like you guys are recapping the news. If everybody doesn't know that, you guys recap the news once a week.
Hopefully.
Okay. Yeah. And I have news feeds. Tom has news feeds, which are basically stuff coming in every day.
It's the Marijuana Daily
New
podcast.
Stuff every day.
To give you an example, what I do is whatever jurisdiction my current active client is in, I'll go subscribe to the city council feeds, get the minutes, find out when they're having their agendas, what they're discussing, who's voting on what. Call this stalkerish, if you will, but I'll find out who the city council people are, their religion, their race, do they have a family, do they not, are they conservative, are they liberal, so on and so forth, and build profiles such that we can then lobby.
I think back to your question about what is the new person entering the market as an accountant. that wants to be in the space. I think they have to really contemplate how they want to proceed in the area. If you talk about just doing accounting work, bookkeeping work, it can be comfortable, okay, and it can be maybe not overwhelming. At 4:00 today, we have a cannabis accounting session, and we talk about some of the uniqueness of the area. There does not appear to be a lot of activity with regards to a book you can go to get this kind of information at this stage. And I think that the other part of it, which is absolutely critical, is I think that you're going to do a disservice to your client if you're looking at accounting without tax. If you don't understand the tax piece, that's such a significant component to booking entries in the accounting books. So, for example, excise tax to a retailer is a cost of goods sold deductible item, where typically you think of all taxes and licenses as other administrative expenses, which in the cannabis space, 280E ends up being a situation where those tax and license activities would generally be non-deductible. So therefore, now you have a situation where that excise tax is not only deductible, but it also is a reduction from gross sales. So therefore, there's some very interesting adjustments that you have to make with your thinking about how you want to be able to enter the market providing services to the space.
So if I'm a bookkeeper or an accountant who just provides accounting services and not tax, I should definitely pair up with a tax expert in this space, such as yourself. Yeah.
It makes a lot of sense that way. And the other thing that I've encouraged our clients generally to do is to have some bookkeeping support themselves on site, because there's just this is an extremely dynamic industry, and there's so many things that are going on day by day by day, whether it's creating manifests, which is a whole new term for accountants, which is actually a traveler that says product is moving, so that's a whole new thing that should be done. There's things happening every day, and to outsource the bookkeeping well, it's hard to do in a cannabis environment, is my opinion.
What I find is best is that the on-site bookkeeper will have a remote desktop connection to the program that they're working in, such that they can then do their duties, but with minimal risk of errors, omissions, and so on and so forth. Yeah.
So how portable is this skill set? I mean, and what I mean by that is Illinois just passed legalization, right? Can you just fold up shop here and go open there, or do you have to start from scratch because the laws, the way they're going to treat it and handle it and track it, it's going to be so far from what California is doing?
The latter, not the former. It will be a lot more difficult to go into a new territory. I have a map of L.A. County and what areas we service and what areas we can't service. And when I say, why can't we service them, it's because there's already somebody firmly in place there, or people that are firmly in place there providing that service. So to be a switcher and try to switch their services to ours would be near impossible. However, the areas that we do target, they are areas where there are higher net income individuals and higher net income demographics. So those folks are willing to shop 2, 3, 4, 5 accountants and then pick. Now, our number one source is those folks will go to their attorney, and their attorney is their greatest advisor, and who will then say, talk to these folks right here. And more often than not, we close those deals. So,
from the portability state by state, I think it's a very difficult task because because as I've mentioned, the taxation is rooted at the local level. And so, and also the way in which micros are defined in California is different than the way micros are defined in other states and so forth. So therefore, you have to have somebody that really is well entrenched for the local kinds of activities. From a standpoint of general setup of an accounting system, compliance with 280E, which is what's deductible, what's not, those kinds of things are somewhat transportable from state to state. But again, to do a complete job, you really have to have a good understanding of whatever's going on locally.
So that's interesting because like a lot of cloud accountants, one of the benefits is if I want to only do bike shops, I can take bike shops all over the country, all over the world. and there's not a problem. But it sounds like this, it's very localized. Like you can't build that same kind of business model.
It was intentionally built that way, I believe, on the simple basis of keeping Big Pharma out for a good, what's been now 20 some odd years.
Interesting.
Yeah. The reason being, if you follow from 1996, the Conditional Use Act, through 2003, it was patients, and the way you paid, quote unquote, paid was donations. 2003 came around and opened up the doors for more retail storefronts. And so that's where you kind of saw that explosion. I don't know if you followed in the news. There were more in 2007. There were more pot shops than Starbucks.
Well, definitely on my
In
street.
LA.
I live on Ventura Boulevard in the San Fernando Valley. So it used to be a Starbucks every block, and now it's a pot shop every block or two. Yeah.
Interesting stuff.
Yep. Well, Thomas and Bruce, thank you so much for joining us today. It was really great to have you on the show. I learned a lot. I think David did too.
I've learned a ton.
Yeah.
Absolutely.
So if people want to reach out to you and connect with you and learn more about what you're up to, where's the best place for them to do that online?
Well, I would say the best thing to do is to email me either at thomas@cannabiscpa.tax or Bruce. And Bruce is at cannabiscpa.tax.
Yeah, and we'll be filling out through the social media areas as well.
Mm-hmm.
Our website is up right now, and so that's a good place to start.
All right, sounds great.
Perfect.
And as always, you can follow me on Twitter. I'm at Blake T. Oliver. And how about you, David?
I'm at David Leary.
And we'll see you again another time. Thanks, everyone.
Thank you, guys. Appreciate the opportunity.